Over 800,000 people left California in just the last 2 years. But what if I told you that leaving might not be enough to escape the state's grip on your wallet? A new proposed law could let California tax former residents even after they've moved out. That's right. Even if you pack up, say goodbye to the Golden State, and settle down somewhere else, you could still owe California taxes. Sound insane? It's very real, and it could hit by February 2026. The bill targets the wealthy, but the language is broad enough that more people could get caught in the net than you think. And once this kind of law exists, it could set a dangerous trend for other states to follow. Imagine paying California taxes while living in Florida, Texas, or even out of the country. This could change everything. So what's really going on here? Why now? And what are your options before it's too late? Let's break it down. Number 1. The wealth tax that follows you. Imagine leaving California, starting a new life in a different state, maybe even your dream home, only to receive a letter saying you still owe California taxes. Sounds like a bad joke, right? But under the proposed wealth tax law, this could become a reality. California legislators have introduced bills that would allow the state to continue taxing individuals based on the wealth they accumulated while living in California, even after they've moved away. That means your assets could be tied to California long after you've untied yourself from the state. This isn't just about income tax. We're talking about a net worth-based tax, targeting individuals with over $50 million in assets, and in some drafts, even those with $30 million. While this might sound like it only affects billionaires, here's the twist. The infrastructure to enforce these taxes could easily expand over time. History shows that once a tax system is built, it rarely stays limited. Who's to say they won't lower the threshold in the future? California's tax agency, known for being one of the most aggressive in the country, would have the power to estimate, track, and pursue your assets, even if you've moved to another state. They'd look at where your wealth came from and say, "You made that here, we deserve a piece." And if you think you can just move and disappear, think again. The proposed bill outlines systems for tracking your financial activity across state lines. In short, leaving the state might not protect your money, and if you're not prepared, this law could catch you off guard. We pour hours into research to bring you real, eye-opening content like this, so if you found this helpful, smash that subscribe button. It's just one click, but makes a huge difference for us. And tell us in the comments, would you still leave California knowing the tax might follow you? Number 2. Targeting high-income earners. Let's be honest, California has never been shy about taxing the wealthy, but this new proposal takes it to another level. Officially, the law is aimed at ultra-rich individuals, those with $50 million or more in assets. But here's the catch. There's a growing concern that once the system is in place, the definition of wealthy could quietly shift. First, it's $50 million, then it's $30 million, and what if one day it drops even further? This slippery slope isn't just speculation. History shows that tax laws often start with a narrow focus, only to expand once they're passed. Remember when income tax was introduced in the U.S. over a century ago? It was only supposed to affect the top 1%. Today, nearly everyone pays it. That's why this wealth tax, while currently targeting the ultra-rich, could eventually reach successful entrepreneurs, property investors, or even long-time homeowners whose property values have skyrocketed. Plus, under this proposed bill, it doesn't matter if your assets are now tied up in a business, property, or investments outside the state. If California decides your wealth was built within its borders, they can still claim a piece. This raises serious questions about ownership, fairness, and freedom, especially for people who already pay some of the highest taxes in the country just to live and work in California. So ask yourself, is this just a tax on billionaires, or is it a warning sign for anyone building wealth? We work hard to bring you in-depth, well-researched videos that actually matter. All we ask is one click. Hit that subscribe button to stay ahead of these critical changes. And drop a comment. Do you think this tax will stay limited to the wealthy, or is it the start of something bigger? Number 3. Retroactive taxation. One of the most controversial aspects of California's proposed tax law isn't just who it targets, but when. Imagine relocating years ago, building a new life, and thinking your financial ties to California are long behind you, only to be told you still owe taxes based on the wealth you built before you left. That's retroactive taxation, and it's exactly what critics fear this bill could introduce. Here's how it could work. If you accumulated wealth while living in California, even if that was years ago, the state could argue they're entitled to a portion of that growth, regardless of your current location. So if you sold a company, built a successful investment portfolio, or saw your property value soar while living there, California might decide that wealth still has a home in their tax system. This isn't just a theoretical risk. Previous California proposals, like Assembly Bill 2088, specifically included language that allowed the state to pursue taxes on wealth earned up to a decade prior. That means even if you moved years ago, you could still be on the hook. Think about that. A law passed in 2026, reaching back to wealth you earned in 2016. This kind of retroactive reach challenges basic ideas of fairness and stability in tax policy. How can you plan for the future if the rules of the past keep changing? For those trying to protect their retirement, family businesses, or investments, this is a massive red flag. We dig deep to uncover stories others overlook, and your support keeps us going. Just one click on subscribe helps us grow this community. And tell us below, should a state have the right to tax you years after you've left, or is that going too far? Number 4. Real estate and asset freezes. Planning to sell your California home and relocate before February 2026? You might want to act fast because under the new tax proposal, the state could make it much harder to move your money before you move yourself. There's growing concern that the law could lead to asset freezes or restrictions on how and when you transfer your wealth out of California, especially if you're flagged as a high net worth individual. This could mean that even before the law takes full effect, California may require detailed financial disclosures, approval processes, or even delayed asset liquidations to prevent people from escaping the tax system. Essentially, it's like being halfway out the door and someone suddenly changes the lock. What's more alarming is how this could affect real estate, one of the most common forms of personal wealth in California. Let's say your home skyrocketed in value over the last decade. That appreciation could be treated as wealth tied to the state. Selling your house and transferring funds to your new state might trigger scrutiny or even taxation before you fully left. And here's the kicker. Some analysts worry that if enough people try to leave at once, California could implement temporary freezes to slow the financial outflow. This isn't just speculation. In the past, similar ideas were floated in emergency budget discussions. The idea? Stop the bleeding before it starts. If you're thinking about selling, transferring, or restructuring your assets, don't wait until this law becomes reality. The exit might already be narrowing. If this video is helping you see the bigger picture, support us with just one click. Hit that subscribe button and share your thoughts in the comments. Should the state be allowed to control your assets before you leave, or is that a step too far? Number 5. IRS collaboration. You might be thinking, if I move to Florida or Texas, California can't touch me. But here's the twist. Under the new proposal, California could work with federal agencies like the IRS to track your financial activities, even across state lines. Yes, even if you've officially changed your residence, the state may still attempt to prove that part of your wealth was created during your time in California, and therefore, they want a cut. This level of coordination between state and federal systems isn't unprecedented. The IRS already shares certain financial data with states for enforcement and audits. With California's aggressive tax approach, it's entirely possible that new agreements could be formed to flag large asset movements, real estate transactions, or changes in reported net worth, all in the name of tax collection. In other words, you can change your zip code, but California could still be watching. Whether it's capital gains, business profits, or even digital assets like cryptocurrency, the proposed law empowers California to keep tabs on you long after you've left. And if you think that setting up shell companies or using offshore accounts is a workaround, think again. The law includes language that could trigger audits or penalties for perceived tax avoidance. This raises a troubling question. How far can a state go to enforce its laws beyond its borders? And if the IRS is involved, how easy will it be for other states to follow this model? The bottom line? Moving away may no longer be enough to move on, not if California has a say. If you've made it this far, you clearly care about your financial freedom. Support our mission with a quick tap on that subscribe button. It's free, but it fuels everything we do. And comment below, should state tax laws be allowed to follow you across the country? Let's hear your take.
Number 6. Legal battles that could drain you. Even if you believe this tax law is unconstitutional, and many experts argue it is, challenging it won't be quick, cheap, or easy. In fact, legal battles over this kind of taxation could take years, and during that time, California may still try to collect. That means even if you plan to fight back, you could be forced to pay first, argue later. A devastating prospect for anyone who's already relocated and reorganized their finances. And here's the catch. This law doesn't just open the door for disputes over how much you owe, it opens a Pandora's box of legal confusion over where you owe it, when it was earned, and what counts as taxable wealth. These aren't simple questions, and courts don't move fast. Meanwhile, you're stuck hiring legal teams, accountants, and financial advisors, all while navigating the stress of being targeted by one of the most aggressive tax agencies in the country. Real-life cases show just how long these fights can drag on. People have spent 5 to 10 years in court with the California Franchise Tax Board over residency disputes alone, and that's without factoring in the added complexity of a wealth-based exit tax. These aren't just minor inconveniences, they're full-blown legal wars that could cost hundreds of thousands in fees and lost time. So even if you win in the end, ask yourself, how much will it cost you to get there? If this law passes and you're caught in the crossfire, it won't just be your money at stake, it'll be your peace of mind. We put serious time and effort into giving you the full picture, not just headlines. Help us keep going by hitting that subscribe button. It's free and means the world to us. Then tell us below, would you be willing to fight this in court, or would you just pay to move on?
Number 7. Businesses are already leaving. If you think this new tax law is just about individuals, think again. The ripple effect could be huge for business owners too. Already, we've seen major companies like Tesla, Oracle, and Palantir pack up and leave California for states with lower taxes and friendlier regulations. These businesses are not just fleeing for personal financial freedom, they're chasing a more predictable, stable financial environment. And now, with this new tax law on the horizon, many business owners might be forced to reconsider their future in California as well. In the past, California's high taxes have pushed entrepreneurs to seek better opportunities elsewhere, and this law could add even more fuel to the fire. If the state can reach into your business finances long after you've relocated, many owners might start to ask, is it worth it to stay here? A business that's thriving in California might soon find that taxes, legal complications, and asset freezes make it harder to grow. This could mean less investment, fewer jobs, and ultimately a reduced quality of life for those who choose to stay. So when big corporations move out, they take a lot more with them than just revenue. They also take jobs, opportunities, and tax revenue from the state. For small business owners and startups, this could be a game changer. Your business might not be a tech giant, but California's new laws could make you feel like you're under the same microscope. If you're trying to grow your wealth through a business, could the law push you out before you're ready to leave? We dive deep to bring you real insights, but your support helps us do more. So hit subscribe. It's just one click and helps us continue creating valuable content for you. And share your thoughts. Do you think this tax law will make more businesses flee California? Or do you think the state's hold on business is too strong to break?
Number 8. Cost of living. California is no stranger to high costs, from housing to healthcare to everyday expenses. But the real question now is, how much more will you have to pay just to live here? With the state's aggressive tax plans, the cost of living could skyrocket even further as the government seeks to balance its books by targeting those who decide to leave. You've probably noticed it already: soaring rent, sky-high property prices, and inflation on everything from groceries to gas. But now, with a potential wealth tax, it may feel like California is squeezing every last penny from its residents, even those who have left. Imagine being hit with a tax for money you made years ago when you were working in California, while still facing the current cost of living. For anyone considering relocating out of state, this could be the tipping point. As more people leave in response to this new tax, the overall cost of living in California may increase for those who stay, too. The state could attempt to make up for lost revenue by raising taxes on those left behind, or even introduce additional exit taxes that affect property values and transfers. For residents who have stuck it out, the burden could get heavier. Taxes, real estate freezes, and the potential of retroactive bills all combine to make California an even more expensive place to call home. So not only do you face the rising prices already pushing people out, but now leaving the state might cost you even more, financially and emotionally. Is staying in California really worth it at this point? Or is it time to consider your exit strategy before it gets any worse? We pour countless hours into bringing you this information, so please take a moment to hit that subscribe button. It's just one click, but it means so much to us. Now tell us in the comments, do you think California's cost of living will push even more people to leave, or will they stick it out?
Number 9. Privacy concerns. When you leave California, you might expect to start fresh, free from the state's watchful eye. But with the new proposed tax law, California could gain unprecedented access to your financial records, and your privacy could be at risk. This law would require extensive financial disclosures from individuals who leave the state, forcing you to report wealth, assets, and even income that you earned while you lived in California. But this isn't just about tracking what you make after you've left. It could also involve scrutinizing your past, down to the last penny you made while living there. In practice, this means California could demand full transparency on your assets, transactions, and even personal investments for years after you've moved. For many, this feels like an infringement on personal privacy. After all, when you've moved away from a state, you might expect that your financial information is just that, yours, not something that can be dug into by your old state. What's more, the state could try to access your bank accounts, property records, and even business dealings to ensure they're getting their fair share of taxes, even after you've left. Now consider this: if California is granted this kind of reach into your financial life, what's to stop other states from doing the same? Privacy laws might feel like an afterthought when states are chasing tax revenue, but the potential for constant surveillance could make people hesitant to relocate. Are we moving toward a future where states have full control over your wealth, no matter where you go? We go the extra mile to bring you this vital information, and we truly appreciate your support. Smash that subscribe button. It's free, and it helps us keep delivering the content that matters most. So now we want to know, how much privacy are you willing to give up for tax purposes? Is this too much? Let's talk in the comments.
Number 10. Precedent for other states. If California successfully passes this law, it could set a dangerous precedent for other states to follow. Picture this: once California introduces this kind of tax, other states with high tax burdens may see it as a way to recoup lost revenue as more and more people leave their borders. If one state can tax you even after you've moved, what's stopping others from doing the same? States with aggressive tax policies might be watching California's move closely, seeing if it works, and once it's in place, it could quickly expand to include more residents, smaller wealth thresholds, or even other forms of taxation tied to your old state. This isn't just a California problem anymore. This could be a nationwide trend. Imagine every time you move, you not only have to deal with the state you're leaving, but the ones that might follow in California's footsteps, seeking a piece of your wealth. As states compete for higher tax revenues, this could become a tactic that more and more states consider, putting everyone who relocates at risk. The thought of being financially pursued from multiple states could be enough to make anyone second-guess their decision to leave. The real danger here is the potential domino effect. Once California sets a precedent, it's not just about one law, it's about the possibility that your freedom to move without financial penalties could be gone forever. We've already seen states like New York, Illinois, and New Jersey struggle with high taxes and losing residents. What if they start implementing similar laws to try to keep that tax revenue within their reach? We put countless hours into researching and creating these videos just for you. All we ask is for one click. Hit that subscribe button and it helps us keep going. Now we want to hear from you. Do you think other states will follow California's lead, or is this a unique situation? Let us know your thoughts in the comments.
As we've explored throughout this video, the potential for California to tax its former residents, even after they've moved out of the state, raises serious questions about your financial freedom, privacy, and the broader implications for the future. From the wealth tax that follows you across state lines to retroactive taxation on money you earned years ago, this proposed law isn't just about taxes, it's about control. It's about whether California can continue to demand a piece of your wealth long after you've packed up and moved on. For many, this will make the decision to leave California that much more complicated. You might have thought that relocating to another state would give you the opportunity to start fresh, but now you may have to consider whether it's even worth it if the state continues to reach into your finances. With legal battles potentially stretching for years and the cost of living already sky high, it's clear that California's aggressive tax policies aren't just affecting its residents, they're affecting its future. But this law isn't just a California issue. Other states may soon follow suit, and that's something we all need to think about as we plan our future financial moves. The precedent set by this kind of law could lead to a new era of tax laws across the country that follow you wherever you go, whether you like it or not. So what's the takeaway? Stay informed, take action, and make sure your plans for the future account for the potential impact of these laws. It might be time to reconsider where you live and how far your money can truly go.